A new era is unlocked in the Cardano ecosystem as 𝗕𝗃𝗪𝗔𝗥𝗘 announces that wrapped Bitcoin, 𝗕𝗃𝗪𝗀, gets new capabilities. 𝗕𝗃𝗪𝗔𝗥𝗘 operates as a decentralized and secure protocol that enables users to unlock the value of their Bitcoin on Ergo and Cardano. According to a new report, 𝗕𝗃𝗪𝗀 can now be used for everyday transactions, traded on decentralized exchanges, and secured loans. The wrapped Bitcoin reportedly went live on the Cardano testnet in April and has been designed to have a one-to-one representation of Bitcoin on the Cardano blockchain. As part of its uses, users can create the tokens and use them to trade or offer liquidity to the Cardano network. According to 𝗕𝗃𝗪𝗔𝗥𝗘, it seeks to contribute immensely to the DeFi explosion on the web by attracting Bitcoin holders to Cardano. It's important to note that wrapped tokens are key to achieving interoperability in the crypto ecosystem, as it enables value transfers between blockchains. In other words, users can use DeFi protocols without necessarily using the native tokens of those protocols. 𝗕𝗃𝗪𝗔𝗥𝗘 has kept its followers updated on the most parts of the journey. On May 2nd, it shared an image depicting the roadmap of the protocol as it announced that the mainnet launch was imminent. The roadmap included different stages such as back-end improvements and a complete audit. This comes at a time the Cardano ecosystem is recording some incredible performances in terms of total value locked, TVL. According to DeFi Llama, it has a TVL of about $141.69 million and growing. We saw that Cardano had a fantastic quarter, so it's going to be interesting to kind of see the recent or more developments and the recent kind of price action for Cardano. And Cardano is making a lot of upgrades, but the price of ADA does remain down, and that's what this video is going to be about. We're going to be jumping down into the charts for Cardano, taking a look at what's been going on and what we think is likely to happen next. As I get into it, you know what to do. Smash that like button. If you're new, subscribe. Don't forget to join us down in Discord. And guys, let's just go ahead and get right down into the charts here and talk about what's going on with the price action of ADA. So some fantastic fundamental stuff's going on. We see some fantastic developments on the Cardano ecosystem, but what about the price? Why is the price heading down? And ultimately, this is all about supply and demand imbalances. If you boil everything down to that, essentially. But what we're going to do here is we're going to reflect on a few things. We're going to have a look at the smart money concepts that you see here. We'll also be taking a look at the Elliott wave theory. And if we have time, we'll take a look at the macro picture as well. So let's start with the Elliott wave. Okay, so Elliott wave theory is saying that we may have actually finished our C wave up here. A little bit hard to say for certain. It all depends on what happens next. Okay, so what we mean by this is we can see that we have a 5-wave count coming down here. We can see that we also potentially have the beginning of a 5-wave count over this side as well. I'd say that we're probably looking at a 5th wave or the 3rd wave within the 5-wave structure, but let me show you what I think is going on here. So we have a couple of things to kind of consider. We have a move here, a bounce up, and another move down. So what we want to do is we want to check this one right here. We want to move this fib to there. We can see that we haven't yet come down to that 1.618. So I still think we're potentially inside that structure, just moving down a little bit. Okay, and if we kind of ignore that kind of micro count, we could take a look at it from this point of view as well, this perspective right here. And we've already hit that 1.618. We hit this here, and then we start to come on down again, okay? So for the most part, it looks like we're either doing a double zigzag pattern within this, or alternatively, what I think is more than likely occurring here is that we end up with some kind of wave 1, wave 2, wave 3 that's got to happen. So I think like we'll have a 5th wave of the 3rd wave within this area, and then up and then down. And ultimately, we're looking for this range just here. Okay, this is basically 32.54 to 34.16. And the reason for that is it would make a zigzag pattern. Now, outside of that zigzag pattern, if we wanted to kind of think about impulsive trend-based structures taking us down deeper, then we are going to have to see significantly different numbers to get here. Okay, so let's just check this. So this high is 41.93. So I'm just a fraction too high on the fib chart there. So I'm just going to bring that down one. There we go. So our 1.618 is down here at 30.09 cent. Okay, we would have to see an overextension in the 5th like that, or an achieving 3rd wave taking us down to those levels, okay? So I don't think that's necessarily the case. I'm looking at this as a zigzag pattern, okay, at the moment, okay? There's nothing else to kind of worry about in my opinion there. I would be looking at it as a zigzag for now, okay? And a zigzag is basically an A, B, C, okay? And it's just a 3-wave corrective structure. So for the most part, we are still targeting out this 32.54 to 34.16 range. If we do lose those and we start coming down deeper, then we'll obviously start talking about whether or not we're going to go impulsive and we're going to come down into these deeper ranges that are still possible as well. Okay, and we can see this one down here at 25 to 27 cent. This one is an obvious area for me to kind of be reflecting on, because I do think it's a range that we kind of have to consider at some point in the future. But ultimately, from an Elliott wave theory point of view, we can see that we are coming down. Now, this C wave still floats up here nice and high, and that's because if this is a zigzag pattern, then we could still go ahead and hit that high point up there as well. Okay, but that's a future thing, and we'll see how that kind of plays out. For now, we want to be thinking about just coming down a little bit more before we have that run to the upside. So from a smart money concepts point of view, what does that tell us? What does it show us? And are we concerned over anything there that's happening? And for the most part, no. We are just below our equilibrium, okay? So we know we got rejected from there, and we're right inside these green areas. These are internal buy order blocks. So we're right down in the zone, essentially, by looking at it. Now, we have a weak high and a strong low. This is an indication that we are likely to stay above the low point down here, which is currently at 29.76 cents. So we're not likely to go down lower than that. And we are likely to break higher than our existing high. Okay, that's kind of essentially what it's saying to us, and that's 46.71. Okay, so we know that that's the things that we're looking for here that's likely. We can also see that we've had a change of characterization from bearish to bullish on this daily chart. And it's not too uncommon that when you have this change of character, you cool off from price, comes down, hits, equilibrium or around this area, and then has another run upwards. And then we kind of get a break of structure when it comes up higher than the swing high that we just had. So for the most part, everything here is kind of playing out textbooks style. Everything is kind of following the path that's kind of being laid out in front of it, which basically means that the people who are buying and selling and trading and transacting on ADA are doing so as per the psychology behind Elliott wave theory, but also following the patterns within the concepts of smart money as well. So everything is kind of coming together quite nicely, and it does mean that we still have the idea of 52 cent, maybe pushing up a little bit higher, more towards maybe the 60 cent range as possibilities here for Cardano. And you can see that these are the two swing highs, which are likely to find ourselves with a lot of resistance at some point in the future. One of the things that we need to kind of not trick ourselves into thinking, though, and we don't want to get too carried away here, is that everything is corrective. Okay, and when we say things are corrective like this, it doesn't give us a lot of hope to think that we are in a bullish market and we can just continue to run to the upside. Ultimately, when this does complete, we'll be looking for a pretty healthy correction to the downside as well. Okay, so we've seen a pretty significant run down at the moment, which is pretty healthy in itself. Okay, this is nothing terribly too unusual. It's about 23%. I think we've still got a little bit more in it. But when we do finish this C wave, if we do actually go ahead and do that, then we'll be looking at potentially a much more to the downside, unfortunately, because I do see a potential scenario where we have a WXYXZ, and this here would basically be an X wave before the Z wave. So we want to kind of consider what that might mean. That might mean that we have a pretty significant move to the downside still to play out, and we want to be a little bit cautious with this because it can obviously play out quite negatively for the price action of ADA. So a little bit of caution. We'll see how it kind of plays out. For now, we're okay, but we are below the 200 EMA. So there's a lot of resistance right in that range. We did break above it briefly, but we haven't been able to keep it. So there's a back testing scenario here on that 200 EMA not looking good. The 50 EMA also not looking great either. We're below the 200 EMA there, and everything is curving down to the downside. So although we do have our bullish setups here with a potential high just pushing us up a little bit further, we don't want to trick ourselves into thinking that we're not going to be revisiting those lows. Potentially even these kind of yellow boxes down here, these are fair value gaps that were left behind, 25 to 26 cent or 28 to 29 cent. I think there's a need to come down here, potentially even come down a little bit deeper if we do see so in the future, or if we do require it in the future, maybe, possibly. Now, from our bigger weekly time frame, we can see that I have put this down at 19.64 on the low side because I still think there's a need to kind of have a little bit of a healthy correction a little bit deeper, but we'll see how it kind of plays out. If it doesn't happen, it doesn't happen. It just gives us a higher price projection overall. As you can see, this is a big three-wave corrective structure, in my opinion. And I'm pretty certain this is 5 waves to the upside. Yes, it is. So for the most part, we are kind of doing a truncated fifth, actually. 1, 2, 3, 4, and 5 like this. And it means that we should be looking for 5 to come up here. Now, on a 1-to-1, that gets us to $34. If we overextend, $116. I know people don't like to hear it, but it is what it is. And, for the most part, this fifth wave, 5-wave movement, whenever it does arrive, could be fantastic. And we go up into those ranges, or it could just be that a double top scenario occurs here. That's the minimum expectation. Okay, so if under the minimum expectation, we will be looking for around that kind of $3. If I actually put a line in there, it's $3.10 according to Binance data here. So you'd kind of look at that as a minimum expectation. And even if you do see this out here, you might start to think, okay, a bear market and another run, we might actually end up with a big impulsive run, taking it much higher. So there's lots of different variables. We'd have to keep an eye on what would happen here. But 5 waves is my expectation for that C wave, because we had 5 waves to start with. You start with 5 waves, you end in 5 waves. So we're looking for 5. Minimum expectation would be 310. That would be my opinion on it. And we should be potentially looking at that $34 as something that is truly possible. I know market cap is a thing that trips up a lot of people. It doesn't really matter though, because market cap is calculated on price. So price dictates the market cap. The market cap does not dictate the price. Let's talk about this all the time. And if any of that is a bit confusing to you guys, join us in Discord or do your own research on market cap. You have to kind of treat it vastly different. It's an informative tool that helps you kind of rank things, but it doesn't show you liquidity. It doesn't show you real money. It just shows you an idea, a theoretical valuation on a company. But we aren't talking about companies. We're talking about blockchain technology that's decentralized, and we're talking about tokens that are decentralized and spread out across the world. We're not talking about liquidity when we talk about market cap, and that's a big problem. So understand that market cap is it's not the same as when you take a look at a market cap of a stock market and you take a look at a company. It's not the same way. It doesn't work the same way. There are expectations when you're investing in companies and the performance of the companies and stuff like that. In this space, it's all about demand and supply. Those are the things that matter, and they're the things that matter the most. So shift that focus away from market cap and whether or not it's trillions of dollars or not. It doesn't really matter. The only thing that really matters is what's going to create the imbalance in the supply and the demand that's going to push price to these interesting levels. And of course, you're going to see an increase in supply. Higher and higher the price goes, simply because people are going to be offloading their positions as they take profits. Okay, and these are things that create imbalances in the order books, which essentially are going to either stunt the growth of price or continue to see the growth of price over time. So if we have to kind of focus on those things, we can see it within the data. We know where things are potentially heading for and aiming out towards. So it's looking like a bright future for Cardano in my humble opinion, but that's just my opinion. What's yours? Let me know in the comments down below. If you found this useful, informative, smash a like button. If you're new, subscribe. Don't forget to join us down in Discord, linked in the description below. Guys, I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.